Hey traders, it's that time of the week again. It's time to start getting ready for next week. This is going to be your weekly review and rev up with your coach, Sage FT. Hope everybody's had a great weekend. It's time to dive into the charts. First, let's talk about what we saw last week and how we took advantage of it. And then let's try to formulate some sort of plan for next week. Let's start with the daily chart as we see the perfect flag, extension, breathe pattern. What you see here is not actually a gap. This is actually just rollover. We went from the March to the September contract. So I want you to kind of put this down some, right? But because we can't, we're just going to draw a trend line. First thing we did was draw a trend line before we got to this, right? So if we zoom out, we want to go through position first. When we're thinking of position, we think of candle, 20, and 200. Candle, 20 period simple moving average, and the 200 simple moving average. We want to look at how they are in relation to each other based upon position first. Then we look at slope after we've defined the position between the three. We can see that candles are above the 20 and the 20 is above the 200. We can see that all three of them are perfectly moving in the same direction at the same trajectory. So we're not bearish by any means. If we zoom out, this is one of the most spectacular runs we've ever seen. So it would be who of us to think that we're just going to call the top of a market because we see a red bar. It's not how this works. We are nowhere near a sell-off. Now, could the sell-off come tomorrow and then I be completely wrong? Yes and no. The sell-off could come tomorrow. Doesn't mean I'm wrong. We don't guess when something could happen. The way that we make money is we trade what we actually see. So we'll get into what we're going to see next week or what we could see next week. We're going to try to derive a plan. But let's continue to look at last week's trading to formulate something for what we could see in the future. What we see here is a perfect flag and continuation. So if this is a perfect flag and continuation, what we're looking for is our pattern to repeat upwards. So what we would want is, because we have a perfect flag, if this were a 2-minute chart, all we would do is wait for the retracement of the breakout area and we would wait for our signal to reverse it to the long side. So as we review last week, let's just look at it like this, okay? Think of all the people that got really, really bearish and started naming all the levels that we're going to go down to because this is the top and all this and all that. Think about all the people on Twitter that you follow that got absolutely annihilated. It's a thing of beauty. I love it. The reason I love it is it used to be me. I used to be the guy saying, this can't go any higher, so I would buy puts and I would lose every single time. I lost 94 out of 100 times. So therefore, I cannot call a top. The only thing that can call a top in the market is the market itself. It will show its hand when it's going to do it. So if we look back at last week, what we have is a perfect structure, perfect looking for the long side opportunity. Let's go into the 4-hour chart. Where was the opportunity? The opportunity was when we get no follow through on this red bar. The low to low trend line was drawn. We get no follow through. We get rally. Okay. Now it comes down. All the wannabe professional traders say, here it is. Look, it's a whatever you think it is. They don't realize that all we're going to do is come down to this low to low trend line. This bar right here, based upon position and structure, is a buy signal. Price is right in line with the 200, or excuse me, with the 20. 20 is above the 200. The 200 is very strong with a very nice upward slope. Rise over run is correct. What they're doing is they're waiting for it to give the signals. So this bar negates any shorting for the rest of the week. Well, it's going to come up a test and then we think it's going to come back down. I don't. I'm not calling short patterns. Notice, those of you that are inside of the live trading desk, notice that I don't call a whole lot of shorts right now. The market is a long bias in the larger time frames. I'm not going to trade against the larger time frames unless it's a pure scalp, because you're only going to get so much out of the shorts. The opportunity cost of shorting is greater than the profit that you'll make on the short. That's why I'm not doing it. Yes, I'm missing a lot of beautiful shorts. I praise you for when you guys make money doing it. I want to remind you of the opportunity cost in which you're doing so. Let's go down to the 15-minute, and this is where it's really starting to wear people out. Watch what's happening here. And we're going to get a glimpse of maybe what we can do next week. Big rally, big rally, big rally, big rally, big rally. Now here's where the pundits come in, right? Here's where the pundits come in. Well, this is a head and shoulders pattern. Look, it's really starting to give you the la 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 la. You don't short all-time highs. You just don't do it. It's very, very simple. There's other ways to trade it, right? So if we live by that, right, where is this going to turn around? Well, think about first before where could this turn around? Who's getting chopped up right now? Think about that. This was last week. So if the people that were trying to buy the pullbacks, they're getting a little bit of traction, but they're not really getting a lot of traction, what happens to that player? Does he stop buying the pullbacks because he's realizing they're not going to give up? Okay, and it could slowly start to fall down to the previous levels that we're looking at, right? Which would be this gray area, which would be the breakout point. Okay, if that happens, what happens? The professionals will come in and take in place, because the people that got tired of taking a loss on these pullback longs, they're going to short at the wrong time. That's where we step in. We're going to be the liquidity for when they flip short. We're going to see that in slow motion if it happens next week. Okay, if it happens next week. If not, it's just going to slowly layer its way down, and then we're going to find a point where it's going to flip around. We only want to start going long again. Listen. Let's think about this as a 2-minute chart. Let's just break this down very, very simply. Next week, what's going to happen? We're going to wait for our trade to appear to and from the levels. That's what we're going to do. That's it. That's what we're going to do. So anytime that we want to take longs here, we're not going to just call a long here at the bottom. No. We're going to wait for position to be long. Right now, the position is short bias, but you can't short the bottom. So if we look at candles, 20 SMA, and 200 SMA, we need this to flip back around and the 20 to start pointing upwards. We need the price to go up, touch the 20, give us our pattern that says we could possibly go higher, define the risk because we trade probability and protection, and then we start looking for climbing highers. We don't want to just say, oh, this is a good place. I think it's going to go. I think we should go long here. I think it's going to go higher from right here. We're going to wait for it to turn back around. Position becomes favorable to the longs, okay? Preferably candles upward sloping, above 20 upward sloping, above 200 upward sloping. That's a bullish scenario. If we get the opposite, well, then we might take trades in the opposite direction. We're not going to guess what's going to happen next week. We're going to wait for it to tell us. All right, that's going to be it for this week. This is our weekly review and rev up. I'm your coach, Sage FT, and we'll see you in the live trading desk tomorrow morning. Thanks.